Down 99% stock price.
The worst company of the year is Carvana.
It'll add a couple gray hairs. It certainly feels dramatic as you're going through it.
In late 2022, Carvana was on death watch. Shortly after appearing on the Fortune 500, the company hit a wall. Carvana shares dropped 99% in just 16 months, and its valuation crashed from $60 billion to $1 billion. Analysts braced for a total financial meltdown, predicting Carvana would run out of cash before year-end. Today, Carvana is back.
Are there some people who ate their words? There absolutely are. Now let's keep going.
Shares are up 85 times its 2022 lows, and the company is spending billions on new acquisitions, technology, and augmenting the customer experience. And yes, it's opening more of its iconic car vending machines. So how did Carvana go from crashing to cruising? I'm Ruth Umoh, and this is Fortune Next to Lead. Christina Keiser, Executive Vice President of Strategy at Carvana. Thank you so much for joining us on Fortune Next to Lead. We're delighted to have you.
Thank you so much for having me. I'm happy to be here.
I'm excited to have you because you have had a front row seat to what is arguably one of the more volatile business stories in corporate America. Really unique turnaround story at Carvana. Not long ago, it was the ultimate pandemic darling, grown at a pace that really seemed to defy gravity. Then almost overnight, the company seemed to hit this wall. Financial analysts called it a near-death experience. You didn't just survive, you actually staged one of the more aggressive pivots in retail history. Today, you're sitting on the Fortune 500 and the company reported record profits. You're recognized as one of the fastest growing technology and online automotive retailers. Lots to dig into there.
Oh, yeah.
Let's start with what exactly Carvana is. In some spaces, it's described as a tech company. It's described as a retailer. Some people discuss the financing aspect. What is Carvana?
Carvana is all of those things. You know, the company was really founded around a consumer experience. And so first and foremost, what we strive to be is a better way to buy and sell a car. And that's can sound very high concept, but I think what we observed basically was a very important consumer purchase decision and experience that many of us go through. Maybe it's the second largest purchase you'll ever make behind a home, and yet not a lot of customer satisfaction in what that journey feels like when you're sort of in the driver's seat, no pun intended, of that experience. And so Carvana aimed to change all of that by bringing sort of the trappings of modern technology into the equation. And we are a very vertically integrated business behind the scenes, behind the website where you browse tons of vehicles and get to see transparent pricing. Behind all of that, there's a ton of infrastructure and a ton of technology. And so I would say we are definitely a technology company, right? Even from day one, we were an e-commerce company trying to build something first of its kind to commercialize a different experience. We're also a logistics company. You can't put a car into a cardboard box and ship it across the country through one of the many providers. And then we're also a financing company because to deliver that transparent customer experience, you need to be able to confront the fact that most people will finance when purchasing their vehicle. And a big part of where sort of the discomfort comes in for many customers is the idea of information asymmetry and the lack of transparency in what am I going to be paying here? Like, that's the car I like. Now, what's it going to take for me to get out the door? And so from day one, Carvana really invested in vertically integrating the financing portion as well to be able to deliver the customer the certainty that here are my exact terms on the vehicle that I'm going to be buying. And this is what's right for me and my family.
Many companies have tried to modernize the used car retail space. Many of them have also flamed out. What makes Carvana unique? What are you doing exceptionally well?
Man, that's a really interesting question. So I think when we first got started, what was the buzz in startups was marketplaces. Asset light, capital light was the name of the game. That was what was getting funded. This is an era when sort of Uber was flying high and it was wow, like look at how fast these things can grow. Carvana is not that. As I just mentioned to you, Carvana built a ton of operations to ultimately deliver a better and technology to deliver a better customer experience to the customer. And I think that came from this conviction that that is what it would take to actually have the control over that customer experience. And that's also what it would take to ultimately at scale be able to have differentiated, cost structure and unit economics that could let us do well by doing good.
It's interesting because we're in this age of AI, obviously.
Yes,
you can't have any
absolutely.
conversation without discussing AI. And there's this lean into discussing the human touch points. And for me as a consumer, Carvana speaks to me because there isn't that human touch point. I don't feel like I'm being sold to and I have to
Right.
navigate the traditional car dealership. How much of Carvana's success, especially as you look at millennials and Gen Z, is the fact that there's less of that human friction. You go online and you don't need to have that touch point. It's not as critical.
I do think that's super important, but it's not right for everybody. So, our sort of ethos on this is that the customer shouldn't have to call us, but they can if they want to. And we should handle those calls extremely well and be able to give them that human element if that provides some sort of value in the transaction. But like you, I would say I like to be sort of unbothered and be able to browse, from the comfort of home in my pajamas, right? And really like get myself to a place where I'm ready to transact. And then I'd like to be able to do that in the most efficient way possible. And so I do think cutting out all of the inefficiencies in the transaction and giving the customer that sense of control is a huge portion of our success. But I'd also say a big part of it is sort of like meeting the customer where they are. And if what they'd like to do is talk through it, we're also there for them. So we shared some information as of the end of the year where about 30% of our customers now get all the way through the retail transaction without talking to a human until the driveway. And that's 60% for our customers who are selling their cars to us. So we've made a ton of progress with this sort of self-service transaction. But again, for those who want to literally or metaphorically kick the tires or just make sure there's a warm, friendly face, on the other end of the line, we are there for them as well.
From the outside looking in, it seems as though you have climbed up into the C-suite ranks at a relatively rapid clip. As someone who's gone through it, it might not have felt all that fast for you. What has helped you stand out?
Oh gosh, I don't know that I've thought about it that way, but what I would say is if I were to draw a through line between my career and sort of the opportunities that I've chosen to take, a big part of it would be people and learning. And not only is it a core criteria that I need to respect the people that I work with, but I want to be able to learn a ton from them. It's also led me to put my hand out and say, hey, I'll grab that project at various points in my career where it may not have felt like a linear step from what I was working on previously, but that's never been that important to me. It was more important to me to be putting myself right in the way of learning and opportunity.
You are steeped within the communications sector. You're
Yes.
advising executives and leaders on how to package a message, which is so important, that storytelling. What did that experience teach you that perhaps leaders don't understand until they're actually under fire?
Oh, yeah. So interesting. So I graduated right into the financial
Oh,
crisis
lovely.
and started a job in communications, and it became quickly crisis communications. That was sort of all there was at the time. What I ended up learning was simplify down to a concrete message that everybody can understand, and the importance of doing that not just externally, but also internally to help the workforce that you are relying on to drive toward next steps. Strategy and communication are cousins. They may even be twins. Any strategy that's not communicated is more like an idea, and it's very hard to action on and very hard to mobilize people around. So that really helped me appreciate the value of really strong communication.
Let's talk about your role. Strategy is
Sure.
what you're overseeing. It's
Yes,
such a nebulous term. It can mean a million
absolutely.
different things depending on industry or company. What is strategy really? What is good strategy? How do you define that?
Oh, for sure. At Carvana, strategy is not a function. Strategy is something that everybody does. And so my role is not to oversee a team of strategists that makes all the decisions, but rather we have people who are closer to every single problem than I could ever be or than our management team could ever be. But we do need ultimately tools to all come together and be sharing results, sharing priorities, and marching in the same direction. And so I think that at Carvana, the role of strategy that I play is really more about synthesis and communication and, target setting for the whole group and balancing and allocating resources to the most important priorities of the company.
You brought up the really great point that as someone who is really pushing the strategy for it, first of all, creating and then executing on it, you need your team members, you need your employees to feel galvanized and understand the vision and move on that. How do you go about doing that? How do you lead?
I think it does come back to communication. And at Carvana, we're a very collaborative team. That means that the idea oftentimes it can come from anyone on the team, and it oftentimes comes from the person closest to the problem. We also have a pretty, I don't know, maybe you could call it like a Socratic method or a collaborative method of we stress test ideas as a group. And a big way that we stress test ideas and formalize them is putting them into writing. An idea that can't be written down and really thoughtfully structured usually doesn't end up making it. And not only can it not be communicated, but I think you learn so much in the process of writing about sharpening it and making it right. So we use a lot of writing to sort of initially lay out what's the long-term goal and then what are the many steps that it's going to take to get there. We have a set of what we call working principles. We have company values, but we also have these working principles that were designed to articulate how we want to work together. Like, what does good work look like at Carvana? And one of my favorite of those is big dreams, small steps. And it's visualized around a trail runner. So if you don't know where the top of the mountain is, you're going to get lost. You're never going to find your way there. But if you're only looking at the top of the mountain, you're going to stumble on the rocks along the way. And so I think we try to find this balance of picking the right goals, really aiming and knowing where we're going, and then getting focused on what are the iterative steps that we'll actually take to make progress rapidly toward that goal.
What is the top of the mountain for you currently?
Oh gosh, I think that for me as a person or for Carvana, I'll start with Carvana.
Yeah.
Carvana recently outlined a goal to sell 3 million retail units a year, 3 million cars a year in the next 5 to 10 years at a 13.5% adjusted EBITDA margin. And that's a big goal. We choose big goals on purpose because we've observed that we're at our best when we have sort of the pressure of a goal and we have to really prioritize and we have to really be thoughtful about each and every step that we're taking. And it's not the end of the road for us, but it's a good sort of midterm goal that orients us around where we want to get from a growth perspective while maintaining really strong profitability, industry leading profitability. And then at the very same time, we're always looking to improve the customer experience. And that's a really big part of how we continue to reach our growth goals is by getting better and then sharing more of the ways that we improve back with our customers.
And then for you personally?
Yeah, it's usually still around learning.
It is.
So I'd say I measure myself in my learning oftentimes. One of my favorite parts about my career generally and at Carvana is that I've never been bored.
Yep.
So there are
Keeps you on your toes.
It does. But I would say that at each phase, I've sort of had this feeling of, I don't know if I ever expected to be at a company this large with operations this big. You can sort of like count all the ways that you're in rare air. And wow, let's squeeze all the learning out of that we possibly can. So I think I'm excited to challenge myself in new ways that map to the ways that the company has opportunity and can grow.
So let's talk about one of the more recent crises that Carvana navigated its way through, because I think that they can be hugely instructive,
Sure.
especially once you come out on the other side. You joined Carvana in 2016. That was about 4 years after the company had been founded, about a year before it IPO'd. The company was just seeing massive growth, massive scale. In 2022, however, there was a delta between the company's internal optimism and the external market's quote unquote death watch. You all saw aggressive growth, a major acquisition, higher interest rates, a tougher used car market. All of those things were colliding all at once. Walk me through that experience. I mean, how were you feeling at the time? What was your emotion at the time?
Carvana had been in this place where we had grown at 100% year on year for most of our history. In a very operationally intensive business, that's really hard work and it feels like a lot. So in a lot of ways, it didn't feel that much different because we had always been not in crisis mode, but certainly in like pedal to metal. I might describe it as almost like offsides in 2022. We had prepared for another big growth year and we have to prepare in advance for that type of growth. We have to almost choose ambition. And then we found a very different marketplace in 22 than the one that we planned for. And suddenly investors change from valuing growth to valuing value seemingly overnight. Capital markets basically close to you and doors shut all at once. So I think that it felt different because we were being questioned. But if I'm totally honest, for most of Carvana's life, we were questioned. We had an IPO that was one of the least successful IPOs in NYSE history, as far as I've ever researched. We were a company from Arizona that had none of the proper accolades of a fancy venture capital investor or, being in New York or being in San Francisco. I think we were a bit off the map, and that has led us to be questioned over and over again. So 2022 almost felt like we were back in that position of being the underdog, of being questioned, of having everyone wondering, did this idea ever work? It's not linear. You get
It's easy to say
celebrated.
that in hindsight, however. Did it feel that way in the moment?
Um,
When you're seeing these headlines saying near-death experience, can they survive when your employees are seeing the stock price tank, when they're seeing
Oh,
the
that was
headlines that the
hugely
company is
challenging.
falling? So how do you navigate that? Because again, in hindsight, especially coming to the other side, of course, that seems like an easy statement, but in the moment, what are you telling your employees?
For
How
sure.
I'm sure there's a moment where you're going from, okay, this isn't great to like, are we in crisis? What's
Oh, for
going on?
sure.
Yeah.
Yeah, for sure. So it's so difficult because you have the scoreboard of the stock price every day, and then you also have a ton of media articles every day. People are going home for Christmas or Thanksgiving, and they're definitely sitting around the table with their loved ones saying, like, is it time to get out of there? There was a ton of pressure coming from outside of the company. I think one of the good things for us is that we have the customer as sort of a ground truth as well. So for sure, there's this referendum on your value every single day in the stock price, but there's also the customer in front of you saying, I value the service that you provide to me. And that can be really galvanizing at a time when everything else is being questioned. You're sort of like, does this business work? Okay, we need to demonstrate to our investors that we can be profitable and then grow again. And we created a 3-step plan that was, get back to positive adjusted EBITDA, demonstrate significantly positive unit economics, and then grow again. And we just started to chip away at that plan. So let's say you're looking to reduce transport distances or something like that. And eventually that changes logistics costs, which is going to show up in your profitability. You can see those transport miles changing week to week. Your investors get to see that once a quarter in an aggregated metric. And we had so much more confidence, I think, because we were able to see that. And we were able to see the folks around the table get that underdog spirit and ultimately feel not entirely uncomfortable with it.
In order to be successful as a company, even as a leader, in some ways, you do have to be blindly
For
optimistic to
sure.
take in risks. Now, again, looking in hindsight, did you feel that that was the case? Did you feel that you moved a little too aggressively? Were there any warning signs where you're like, oh, yeah, maybe we shouldn't have been tracking for a growth period. We should have shifted or adjusted in these specific facets?
I think that's a really interesting question, and there are a lot of lessons learned. But I would say one of the biggest lessons actually doesn't have to do with were we too aggressive around growth or anything like that. It has to do with focus. I think that we came to believe that we could continue to add resources to various parts of the organization and pursue more at once. And we had a goal of sort of parallel processing more and more and more. And what you have to do in a moment of crisis is get focused. And then I think we came to believe in that almost religiously as the best way to work, even when you're not in a moment of crisis. That it's often said, startups die of indigestion, not starvation. But I think big companies do the very same thing. And maybe they don't die, but they become much less effective. They become much less nimble. They become much more bureaucratic. And so this afforded us an opportunity to be really religious about what our priorities were, get that list tight, really make sure it was a priority list, not just a list of all the cool things we wanted to do. We like to say it's the error of ambitious people to want to take on more. And it's a natural error to make, but I think we now have this governor of, are we chasing the right things and are we ruthlessly prioritizing? And the way that I like to think about it is you're doing it right if it doesn't feel good. It has to feel like you're giving something up to know that you're actually setting a list of priorities and making a cutoff.
What did you feel like you had to give up? What was your trade-off in terms of
Ooh,
projects and maybe things that excited you?
there's a long list of things that we had to give up, but many of the things were ones that didn't have a good why now. I described this really aggressive goal that we've put out there. And part of why you do something like that is that then when the conversation about the really neat idea that's a little far afield of what you're working on comes up, you can sort of say, is that going to help us get to 3 million customers? Is that going to help us raise customer NPS? Is that going to help us spin the flywheel of positive word of mouth? The answer is like, eventually, it's probably not now.
You said that what really helped you move to this period of growth is becoming focused. You mentioned focus repeatedly. When I was interviewing Nike CEO Elliot Hill, he said the same thing. We got to get focused. Similarly, when I interviewed the CEO of Airbnb, Brian Chesky, they also, like any company, had their period of crisis. And he said it was getting back to our focus, which is around experiences and travel. Is that how you're describing focus for Carvana? And if so, what do you mean by getting back to our roots? Because also at the top of the conversation, you talk about the need to evolve in. Day one is not going to look like day 100. So how do you kind of marry the two ideologies?
For sure. I do think it's similar. I think that for us, there's sort of this customer experience North Star, and that's backed by a business model North Star, if you will. So this is a little bit on the nerdier side, but we're this very vertically integrated business. We have a fundamentally different cost structure than our competitors, and that lets us kind of capture more of the value chain by doing more across the automotive transaction. That lets us deliver a better customer experience and deliver industry-leading profitability. And so that's kind of a North Star that we have, is we are just 1.5% market share in an enormous market today. Most other consumer verticals, a market leader would have a much larger market share than that. And so I think just doing what we do better and bigger and letting all of the positive feedback in our model help us continue to improve the customer experience, which then feeds back as growth, which lets us continue to improve the customer experience. What's core and what reinforces that customer experience and business model advantage loop? The true high ground is when, by executing our model that's different and we believe better, we can deliver a differentiated experience that stays differentiated and continues to evolve. That's what I would say is like core and high priority for us. And then the way we measure it is really always, as much as possible, in quantified either unit economics or customer experience terms. So, last year we measured the value that we delivered back to the customer in the form of delivery times that were on average 1 day faster, and interest rates that were a point lower, and delivery fees that were $60 less. And those are tangible benefits. We often talk in unit economics space, or sort of like customer economics or customer value space. And I think that really helps us prioritize.
I want to talk about the business model, certainly Carvana's inventory, and pivot to its physical infrastructure. Carvana sold just under 600,000 cars last year. The more inventory you hold, obviously, the more choice you can offer customers, but also you take more risk if used car prices fall. So how do you kind of manage that trade-off?
Well, I think one of the advantages of the model is that we're able to expose centralized supply to national demand. So unlike, the traditional retail model where you can buy the vehicles that are available on the lot in front of you, you can take advantage of our inventory across every single Carvana inventory pool across the country. And you see distance as time. For the most part, you can have this one today and you can have that one in a few days' time if we ship it across the country. So I'd say that it's less risky than it appears, because if you look at sort of our turn times and the amount of inventory we hold relative to the number of cars we sell is very healthy. Another customer benefit that we were able to achieve in the last year was adding 20,000 units of selection. And the single most common reason a customer doesn't buy from us, at least that they report to us, is I couldn't find what I wanted. So every single unit of diversity that we bring to the platform is likely bringing a different customer to the platform. So it's one of the core ways to kind of spin our growth flywheel, is to continue to add inventory. And we'll do that responsibly, right? We don't intend to do that at the expense of the health of the business. But fortunately, these things can kind of come together. And the more inventory we have, the more cars we sell, the more cars we can hold, the more cars we sell.
Carvana also depends heavily on customers being able to finance used car purchases. If interest rates remain high, they're quite high right now, how much pressure does that put on Carvana's business?
I'd say that it puts pressure on the entire marketplace. And so we don't set benchmark interest rates. Wouldn't that be nice? But we don't. And we don't have any governor on inflation. And so those move at their own pace. If you look at the used car industry over time, annually, it's selling 36 to 40 million cars. There's definitely a swing there, but it's a pretty tight range. It's a lot. First of all, it's a very fragmented industry. And then there are these moments of up and down, but there is robust demand. And so I think we see sort of the market movements as certainly very important to stay attuned to. We're very keyed into customer affordability. And so not being able to control benchmark interest rates, for example, is a difficulty of that. It would be nice to be able to help our customers get into a vehicle with a lower interest rate. Having said that, we can focus on what we can control, which is our efficiency, and try to pass more value back to our customers. So for example, I just shared that we passed a point of rate back to our customers in 2025. And that was the result of our financing platform getting more efficient and, improving our credit scoring methodologies and all of that. When we achieve a gain like that, we can either choose to take the profit ourselves or share it back with our customers. And it's an easy call on that front, especially given the affordability challenges in today's market.
Was it simply a matter of goodwill? Is it an measurable ROI?
For sure, there's a
Yeah.
measurable ROI, right? If affordability is one of the principal challenges and the whole marketplace is struggling with that same question of how do I help the customer in front of me afford the car that they want, being able to help the customer afford the car is a lever, as
And
well.
presumably they come back to you when they again need another used car.
Yeah, that's certainly the hope. We hope that people walk away from the transaction delighted, and we take that really seriously. Like I've a meeting on my calendar every single week where we go through our NPS reviews and we listen to. We typically focus on the worst, not the best, right? Because that's where we can learn the most. And we're listening to calls, and sometimes we're cringing and saying, "Gosh, we got that wrong." How do we make sure that systematically we get that right in the future?
Carvana acquired a U.S. physical auction business
Yes.
for $2.2 billion in 2022. The deal was a pivotal one. It was a bit controversial at the time. But for a digital first company, buying 56 physical auction sites across the U.S. seemed counterintuitive again at the time. Why was it worth the risk? What was the thinking there?
Well, so this was really an acquisition that was aimed at fueling our path to scale. Getting land that's zoned for automotive use, that is adjacent to city centers, that you can use to we inspect and put work into every single vehicle that we sell so that we can certify its condition. And then we hold the vehicles at those very large scale sort of industrial facilities until they're sold. And so we need those facilities across the country. So one of the advantages of acquiring ADESA, which, as you mentioned, it was the second largest wholesale auction in the United States, is that it already had this tremendous footprint of 56 sites that were the right size, the right use. You could never have recreated their positioning in terms of the age of the company that we bought relative to, the modern era. So it was just this very compelling way to say this can be our sort of launching point footprint for the future from an infrastructure standpoint. And we've now started to integrate Carvana reconditioning at those wholesale sites so that we can spread, sort of inventory building across more and more locations. That has many advantages for the company, including, on the cost side, it's more efficient. The cost to transport a vehicle inbound to one of those facilities and then outbound to the customer is down because the miles we have to travel is down. So that's all more efficient for the company. And then for the customer, we're building more and more selection. They can get vehicles faster, and the flywheel continues to spin. So I think ADESA was a controversial acquisition partially because of its timing. Ruth, we announced it before any of the big trouble happened, and then we closed it right in the middle of the questioning of, does this model work? Is this a zero interest rate phenomenon? Like, does anyone want to fund this business anymore? And so the timing was awkward. It added debt to our balance sheet that no one wanted to see us have at the moment. But I'd say now, ex post, it's very easy to look back and say that was so worth it. It is our growth engine, and it's been a very successful acquisition.
I want to stick on ADESA because Carvana prides itself as a tech disruptor. ADESA is this legacy brick and mortar wholesale operation. So, how do you integrate this move fast tech culture with a traditional and very labor heavy auction business without losing the strengths of either?
Integrations are complicated, I would say. And in a certain way, we were fortunate to have the world blow up in front of us as soon as we did that acquisition because ADESA ran almost independently for its first couple years with Carvana, which I think gave us a slow pace to start in sort of a healthy way. We got to know their business better. Imagine being in their shoes. You get acquired by Carvana and immediately Carvana is persona non grata. So that was a difficult thing for them. I think we had to sort of earn their trust and help evangelize what the future might look like. And then when we did begin to integrate some of our sites, it was really about getting everyone on board, helping folks appreciate what the future looks like, and also helping ADESA customers who may have little interest in what Carvana's, retail intentions are.
One of the most recognizable features of Carvana is your vending machines.
Yeah.
Is there economics at play there, or is it all brand and spectacle?
It's both. It's both. This was a brilliant idea. It predates me. I won't take any credit, but I think our CEO, our founding team, our brand team had this thought of, okay, it is very hard to build a brand in any space, but in automotive, you'll note if you sort of look around, there aren't that many that aren't manufacturers, right? If you think about the retail side, there just aren't that many brands that have broken through at a national scale. And it's extremely expensive. So as a young company, how do you sort of make a splash was definitely on our minds at that phase. And this was this newfangled idea. It was like, let's take car elevators. They're available in Asia and in Europe. They're used for vehicle storage all the time, but let's wrap it in glass. It's like a Jiffy Lube is like mashed up with an Apple store. It's going to look really neat. We're going to make it gimmicky, have a big coin that you drop in it, call it a vending machine. And that put us on the map from a brand perspective for sure. And then we were the vending machine company for years. Every article that was written was the vending machine company, which is at least people were talking, right? It's a huge benefit. There was also advice that we got early on that was, a broker that we worked with, a real estate broker, said, you need a place. And we sort of giggled at that advice being an e-commerce company. We were like, that's sort of silly. But what he meant was ultimately so true. How do people believe in a business that their friends haven't transacted with yet and that they aren't totally aware of? Part of it is just knowing, like, I can Google a place. There's someone to go talk to. And it gave a bit of credibility, I think, as well, to have an internet business connected with a place. Having said all of that, it is also hugely helpful from a efficiency standpoint. So in order to fulfill each transaction, we either drive to the customer's driveway and back, or they come to us. And we'd love for people to have the car as quickly as they can and to be able to fulfill that demand as efficiently as they can. So we wanted to offer a pickup option. But if you're going to offer a pickup option, it needs to be great, because otherwise, why wouldn't you stay at home, right? And so we've made it sort of an event that's fun and memorable and Instagrammable and the whole thing, right? And then it's a permanent glowing billboard in the sky that also put us on the map metaphorically and literally in terms of, okay, that's a company I've heard of, and I now have an emblem that I can associate with it.
Let's very quickly touch on AI.
Sure.
I'm going to bifurcate my question. First, where are you seeing Gen AI, agentic AI, materially move the business at Carvana? And then how do you personally use it to be more efficient in work, in your personal life?
Oh, yeah. It's being used across the business. I'll speak, though, to a couple of areas that I'm excited about within Carvana. So one is just the customer experience. We bought a company before COVID that was building a chatbot for automotive. And this was before LLMs. It was a very different exercise at the time. But we already sort of had this concept of, we own all of the services that are necessary to give someone a very personalized automated experience. We do own all of our services. We own the finance service. We own the logistics service that says, when's the next truck moving and what time could you get that vehicle? What will your down payment be on the vehicle? And so using AI in customer care has been this huge lift for us. I'm also very excited about how we're using it in software development. Our engineering leadership is really evolving the way we come up with ideas all the way to shipping and writing code. And it's really changing our equation of where the bottlenecks in the business are. To answer your question about how I use it all the time as a brainstorming partner. I for sure use it for analytics within the business. And I find more and more that I'm also dictating to AI. I don't know if you've found yourself doing this as well, but for me, one of the constraints is just hands-on keyboard in front of computer time. If the bottleneck is me getting my thoughts structured and on paper, there's no excuse for that anymore. I can, on my drive home, dictate and then clean those thoughts up and have them neatly organized by the end of the day. I need to find a way to have AI do more of the reading the mom's WhatsApp groups. So I haven't cracked that yet, totally honestly. Ruth, I'm still missing a lot in those chats, but I think that synthesizing your thoughts has never been easier. As a journalist, the cold start problem of just like a blank sheet of paper can be the most intimidating thing. But these days, the first draft is easier than it ever has been. So I really find it valuable for that.
What's the best leadership advice you've ever received?
This is more career advice, but I will share it anyway. Someone said to me, don't spend 5 years getting 2 years of experience. And it stuck with me ever since. I thought it was just a great way to encapsulate, like, you get one life to live. You get to set the framework for what experience you value and what learning you value, but push yourself, get out there.
Love that.
Yeah.
Oh, I'm stealing that one. How do you recover from a career or a business mistake?
Own it. I think that's the simplest thing. I find people tremendously credible who own their mistakes and who speak candidly. I don't expect perfection from anyone. I don't think people expect perfection from me, but certainly reflection, authenticity, and accountability is, I think, how you earn trust.
Well, I of course have to ask what kind of car you drive.
Oh, right now I drive a Rivian R1S.
Lovely. All right. Well, thank you so much for
Thank
coming along
you.
on this ride with me.
Of
Pun
course.
intended. Such a robust and
Thank
insightful
you so much for
conversation.
having
Really
me.
such a pleasure.